Building good credit, tips for responsible credit card use. Hey there, wealthy youngsters! In this video, we're diving into a crucial topic that will set you on the path to financial success: building good credit, tips for responsible credit card use. Credit cards can be powerful tools, and when used wisely, they can help you establish a strong credit history. Let's get started. Imagine you have a financial reputation, kind of like your reputation at school or among friends. This reputation is called your credit, and it's important because it affects your ability to borrow money or make big purchases. Building good credit is like having a golden ticket to better financial opportunities in the future. So, how does this credit thing work? Well, when you use a credit card, you're actually borrowing money from the credit card company. But remember, you have to pay it back, usually at the end of the month. When you consistently pay back what you owe on time, it shows you're responsible, and this positively impacts your credit score. Let's break it down with some examples. 1. Timely payments. Always pay your credit card bill on time to avoid late fees and negative marks on your credit report. 2. Low credit utilization. Try to use only a small portion of your available credit. If your credit limit is $1,000, keeping your balance below $300 is a good rule of thumb. 3. Diverse credit types. Having a mix of different types of credit, like a credit card and a student loan, can show lenders you can handle various financial responsibilities. 4. Long credit history. The longer you've been responsibly using credit, the better it reflects on your credit worthiness. 5. Avoid overspending. Only use your credit card for things you can actually afford to pay off. All right, wealthy youngsters, it's quiz time. Let's see how well you've been paying attention. I'll ask you 6 questions, so get ready. 1. What's one key benefit of building good credit? 2. What's the potential downside of not paying your credit card bill on time? 3. What's a healthy credit utilization percentage? 4. Why is having diverse types of credit beneficial? 5. True or false, it's okay to max out your credit card as long as you make the minimum payment. 6. How does a long credit history positively impact your credit score? Great job, wealthy youngsters! Take a moment to think about your answers and remember, it's okay if you're not sure about everything. Learning is all part of the journey. Alright, let's reveal those quiz answers and dive into the explanations. The first answer is, building good credit opens doors to better financial opportunities, like lower interest rates on loans. Think of good credit like a VIP pass in the world of money. When you have good credit, banks and other money-giving folks trust you more. They're more likely to lend you money when you need it, whether it's for a car, a college education, or even your own place one day. And guess what's super cool? They'll lend you that money at lower interest rates. Imagine if you're planning to buy a new car. With good credit, you might pay less in interest, which means more money in your pocket in the long run. The second answer is, not paying your credit card bill on time can lead to late fees, increased interest rates, and negative impacts on your credit score. Missing the due date for your credit card bill is like losing points in a game. You see, when you don't pay on time, credit card companies aren't too happy. they might charge you extra money, called late fees, which can really add up. Plus, they might start charging you more interest, turning that small debt into a bigger one. But wait, there's more. This can also leave a mark on your credit score, like a tiny scratch on a shiny car. The lower your credit score, the harder it becomes to get loans or rent an apartment. So, remember, paying on time is like keeping your score high in the financial game. The third answer is aim for a credit utilization of around 30% or lower to show responsible credit management. Here's a trick to master. Imagine you have a pizza and you only eat 30% of it. That's a balanced slice, right? Well, it's the same with credit. Your credit utilization is like the slice of pizza you use out of the whole pizza, which is your credit limit. If you have a credit limit of $1,000 using only around $300 or less, is like having a balanced credit diet. This shows you're not relying too much on borrowed money, and that's a sign of a responsible money manager. The fourth answer is, different credit types showcase your ability to handle various financial commitments, boosting your creditworthiness. Imagine you're playing different levels in a video game. Each level is like a different financial responsibility. If you show you can handle different levels like having a credit card, maybe a student loan, and later a car loan, you're like a gaming pro. Lenders see this and think, wow, this person can handle various money challenges. This makes them more likely to trust you with bigger things, like a mortgage for your dream home. The fifth answer is false. Maxing out your card can hurt your credit score and lead to higher interest charges. Picture this. Your credit card is like a cool friend who lends you money when you need it. But if you always borrow every last cent your friend offers, it might seem like you're not so good at managing your own money. Same goes for credit cards. If you use up all your credit limit, it might look like you're not handling your finances well. Plus, here's the sting: your credit score can drop, and credit card companies might charge you more interest. So, leave some breathing room on your card, just like you'd save some pizza for later. The sixth answer is, a longer credit history indicates your consistent financial responsibility over time, boosting your credit score. Think of your credit history like a superhero origin story. The longer the story, the more the hero's reputation grows, right? Same goes for credit. When you've been using credit responsibly for a longer time, it shows you're not just a one-time superhero, you're consistently awesome with money. Lenders love this because it tells them you're a reliable borrower. So, the longer you show your money superpowers, the higher your credit score climbs and the more doors open for you in the financial world. And there you have it, wealthy youngsters. You are now armed with the knowledge of responsible credit card use. Remember, building good credit takes time, but it's worth the effort. Stay smart, stay responsible, and pave the way to a financially bright future. Until next time, keep making those wise financial moves. If you enjoyed this video, we kindly ask that you give it a thumbs up. Consider subscribing to our channel. Please feel free to share your feedback in the comments section below. For further communication, you can reach out to us at thewealthyyoungsters@gmail.com. See you in the next video.